So I talk very fast, and I wanted to make a couple comments on yesterday's speakers. I have they were asking questions about inequality and what are we going to do when the robots take over, and how are we going to work the economics. Is that last year I gave a talk on that, but the article is called Jobs Are Dying, is on my blog. If you want a card for that, I'll give you a card, but it's going to be up here in a minute. And I'm currently finishing up my second book. It's called Creating a 21st Century Win-Win Economy. And I will send it to everybody here at no cost if you email me around January 1st. If you email me tomorrow, it'll get lost in my emails. I'm not too techy, okay? And I do have some people helping me, volunteers, but I will send you a free copy of that book. It's called Creating a 21st Century Win-Win in Economy in which everyone wins, which we'll talk a little bit about today. I noticed that when we're defending monetary reform, we had the talks yesterday on social justice, and then we talk about fairness. Isn't that sweet? Whatever that means. But we have to defend monetary reform and on an economic reasoning and logic first. Otherwise, we're going to be called, you liberals are doing it again. You bleeding heart liberals are, well, you're doing it again. And when you use money like public money, we have to take this fight to the right, which I'm starting now. I started with the left because they were kind of lost and the right's wrong. So I started where the easy people are, but they're not so easy, right? We'll find out. So we have to start defending economics. Now, all that stuff is valid arguments on social and community and social justice and fairness, all valid arguments, but they come after the economic argument because we want to bring in the right. And if you noticed, okay, around the world, not only here, in fact more often in South America, people go here and they vote left, and then all of a sudden they vote right. Okay, well, they're not in charge of the economy, and they're voting for the economy and what's in their pocketbook. There we go. Now all you have to do is teach me how to work it. All right, got it. Okay. Forward back. Okay. Now, when I first did my first talk here, is that Bob liked some of my sayings that I came up with, and I'll show you those old ones at the end if we have time. But I have to keep up with Bob. I have to invent new ones each time I come. Okay. I've got two for you today, Bob, and I'll go through it. Our elected political leaders are not in charge of the economy. The commercial banking system is in charge by controlling the amount of money in circulation. And it's really diverse circulation. And so people keep voting. That's why you see the move to the left and the move to the right. And who's ever going to be president of the United States, if we have a crisis here, they're going to be blamed for it. And we will, whoever that is, and we'll lose the next election. Because people vote their pocketbook is the main issue. Uh-oh. There I am. You know why I like that picture? Because we had matching outfits. Okay?
Who's the lady you're with, Bob?
Yeah. And you notice I'm wearing my AMI pin. And I also brought her a complete notebook and I told her about monetary reform, and I got absolutely no response, which is the usual, right? It tied into Robert Rubin. We did get a little bit of response. I just heard from somebody today. We might have triggered a little bit on the Trump side, okay? So this was November, last November, and it's the fifth time that I've hit the Clintons. I mean, these two people are really smart. I think they're really our only hope. If we can pull away from Rubin and get them to read, I think they'll come over, okay? And she'll probably be the next president of the United States. Okay? So I'm still banging on them unsuccessfully, but I'm not stopping, okay?
Yeah.
Now, the key thing is that you have to review nationalism, because of politics, we talk nationalism, but you have to view the economy on a global basis now, not on the basis of the United States. So when they say, well, we got to bring our jobs back to the United States, they says, well, what about those poor Mexican workers at $5 an hour? They're all going to be unemployed. What's going to happen? They're all going to come here, okay? So we have to think about the economy on a global basis. All right, let me look at my next slide here. Okay. Now, for you engineers, I've broken down the economy, a monetary system, as two basic processes. For your architects and your science, it's really two processes. It's one, the creation of money, and second is the distribution of money. Two separate, distinct processes. Now today it's all one. When they make a loan, they create the money and it distributes it through a loan. The Need Act creates the money separately with the monetary authority, and then they spend it in. So it's like two separate processes. Okay? So you have to understand the nature of money and the creation and distribution. So the creation process, the important thing, and when I try to explain things, unlike Professor Yamaguchi, I try to do it in my book, is for the average person and our average leader, or our elected political leader. Unfortunately, they don't read because they're too busy raising money, but at least I try to do it on an average basis so people can understand this. So what I do is, money is not scarce. It costs, this is an important thing, it costs nothing to make. Zero. All it takes is one little finger pushing a computer and I can create trillions of dollars, right? Digital. It costs nothing to make. All we have to worry about is excess inflation, which I'm going to cover later. So it has to be created based on volume and inflationary statistics. And volume's important geographically and around the world because of asset bubbles, which are not inflationary statistics. That's why you see real estate, they ignore the real estate bubble. We need to have checks and balances on the creation process, and we need to have a secure computer. They're talking about the blockchain. I'll talk a little bit about the, my arm's getting a cramp already. Talk a little bit about the computer and the Bitcoin. Even what Yamaguchi says is stable and secure. Well, it's not so stable when it goes from $200 a Bitcoin to $1,200 a Bitcoin. That's not stable. Also, the computer, the hackers have got in and got it. So it's not completely as stable as you want, and it's not money really creation. It's competing against the banks, besides the criminal aspects, because the banks way overcharge for their transactions. The transaction's a penny and they charge 1% and 2%. They're way overcharged for a simple fee. So the banks are going to get into that. Okay. Next slide. The new saying for Bob here. It's not who is running the monetary system, but what is the... Okay. It doesn't matter who's going to run it, so you have to create a system that are geared for the imperfections of human beings. Okay. It's interesting how that computer went totally black. So the creation process can be, if we're going to bring it back to government, can be in three areas of the government. The Need Act has a separate monetary authority. I'll take it any way I can get it, but you can have it in the legislature and you can have it in the executive branch. You don't necessarily have to have a separate monetary authority, which comes with a whole set of other political implications. Where the legislature is doing it already, they do it through deficit spending. Deficit spending is a money creation. So that's the creation process. And it means, I like to have a slide for this one. Well, maybe I'll start back on this slide because this is a little confusing. How do we structure the government, the federal governments of the world? How would they structure a monetary creation and distribution system? And the NEED Act is the simplest one, as they stated, is they have a monetary authority doing the creation, and they say, okay, create it that much, and the legislatures just do it through their spending. Okay. Another way to do it is a diversified system, which I'm going to go into, and we're going to bring in the right. And the reason to do it is that we want to bring in the right in private enterprise, because we're not going to pass this, because remember, unless we bring in the right, okay, we are not going to have it, we're going to have a big trouble passing it, and we'll be able to get more money out into the public and the public good. So we can structure a system that brings in taxes and you spend. In the spending money, when you spend the money, you have no return of the money. What does that mean? There's no interest. It's not a debt factor. Okay? In other words, it's grants. It's the spending like they're doing now. Although the government is very big on funding, especially the techs, entrepreneurial and venture capital. People don't realize that. If you read Professor Mazzuto's book, The Entrepreneur State, which we are, we're funding a lot of these tech stuff because private capital doesn't want to go in. It's too high risk for them. So we're funding a lot. You'd be surprised how much we funded of Apple and Google and all the things that are going on. Okay? So back to the structure. So you have the monetary system. Okay? So you have the fiscal system doing the spending. Okay? And with no return, and then you have the monetary system doing the investing. In other words, they loan it out for a loan figure, not the creation, the distribution. They loan it out and they invest it out for a stock market or equity return. So if there's a return to the Treasury through this distribution system, it goes through the monetary side and they create money that way. Okay? So you can have two separate ways of doing it. The other way you can do it, structure, is that you eliminate taxes altogether, okay? And we print all our money. It's a little bit like the first one, the NEED Act. We spend all our money by printing it, okay? We use the word printing. We spend all the money by creating it, okay? Then we tax to reduce the supply so we don't have excess inflation. Okay, so you have to actually have a tax system. Okay, so you can say that's a pure monetary system, right? There's no fiscal system. This fiscal monetary system spread is kind of obtuse anyway. I just went through that second system. So you can structure the governments in many ways to put money out there. Okay, and so the reason we want to, when we start the legislation, if you've ever been involved in a legislation process, what goes in or what starts, like the NEED Act, it's not what comes out, as we all know. So they're going to have a lot of input. Our goal right here, right now, and my goal is just to start the debate. And I meet with a lot of congressmen, and they're just as lost as the average person. Even if they lose, they won't take up this subject, which is an interesting thing. So there's three ways to distribute created money, new money. Direct currency issue. My favorite example is food stamps. It's basically get a credit card and they go spend it on food. You can do it as direct currency issue. The other way is using debt. And the third way is using equity, as I mentioned. Now, my friends on the left say, well, why don't I just put it up? Why do I have to do debt and equity? Because I can put more money out there. Because debt and equity has a return to the Treasury, okay, other than taxes and interest or stock gains. And that means I can put more money out there to do the things that we want to do, okay, without creating excess inflation. The cost is small for distribution. Okay. We need to increase the distribution outlets, not the creation. And there are 30 reasons why, and I'm going to read the 30 reasons. And I don't read you generally, but I want to read that. And then I'm going to go into those outlets because I'll solve the prior speakers, not Yamaguchi's, but the other speaker on solving the pension problem. And then I'm going to solve the inflationary problem. I'm going to read it. So if I can hold the mic and read at the same time, that's another factor. And if I touch this computer and it goes black, all right. Because I've never done this. I've always told people to go to the website. Huh? No, that's all right. I'm fine. I go to Pilates 3 times a week. That gives me a little strength still left. I'm going to start reading these. These are the summaries. When I get to 7, tell me to change the slide, okay? Diversification dilutes the power that any one system brings to the monetary creation. These are not in order of importance. It eliminates the benefits of monetary creation only going to a few private citizens in one sector of the economy. We should only one financial industry system. Why should only one financial industry system of commercial banking have the monopolistic power of money creation and infusion when there's an unlimited demand? Wouldn't you like to have your own printing press in your basement? Number 2, actuality. The current system of higher interest rates to control the money supply punishes the weakest, smallest players first and most severely, while the largest and the more powerful enterprises are able to withstand the increased cost. The major reasons for business failures are too much competition, mismanagement, and lack of capital, the latter being the most common. Number 3, controlling the monetary supply based on interest punishes the entire economy. It should be controlled by volume, geography, and industry, guided by inflationary statistics. These decisions can now be made easier with the computer power of the present day. Diversification reduces banking favoritism. This is reform and diversification, by the way. Diversification reduces banking favoritism, nepotism, bribes, political cronyism, shoddy management, criminal activity, and it increases transparency. Number 5, the boom-bust scenario we see in various assets, industries, and regions will be greatly reduced, but not over lending in successful industries, companies, and individuals. It makes managing risks less difficult. The current dilemma of regulation is that it's difficult to deal with borrowers when life is good. Who tells the banks not to lend to real estate when real estate is the hottest part of the economy, or running up great profits, or shipping, or oil and gas, or high tech? Having other systems with different objectives will more effectively control over lending, thereby reducing boom-bust scenarios within an industry and an entire economy. This is in my website. I have about 24 of them, but in my book I've increased them. I got them up to 30. Diversification gives more capitalistic opportunities to others, creating more owners, increasing competition, while at the same time reducing human hardship and inequality. This means growth, whatever that means. Offsetting one of the other major flaws of capitalism, which is not enough competition. The current system of banking creation of new money goes 70% plus to real estate mortgages, not businesses. Huh? Change it? Okay, we're going to go, well, I'm not on 7 yet. Now, in my book, and the way I approach monetary reform is I don't hit it head on, okay? I have a bunch of other flaws to improve all the levels of capitalism in our economy, and this monetary system, the monetary reform is the most important. So I include a lot of other things along with trade and minimum wage and all those other topics. And I'll be around the whole time, including Sunday, so if you want to chat on any of these topics, I love to talk because I really enjoy coming to this place, because I find a few people that agree with me. Number 7, diversification expands investment of new money based on an ability to succeed and not solely on the ability to repay. It is also based on the quality of your talent and the need for your enterprise, rather than focusing only on the quantity of your collateral. Number 8. Oh, it worked. Diversification reduces the effects of now when I say diversification, I mean monetary reform and diversification, because the current fiscal system and the NEED Act has a lot of diversity in it, as I mentioned. Diversification reduces the effects of any over-lending during economic expansion. This means that new distribution systems can divert new money from industries that do not need it to those that do. This allows for more lending and investing on the monetary expansion inflation side of the equation rather than implementing a contraction. The end result, lesser chance of recession, depression. Number 9, excessive wide-range defaults and bankruptcy, domestic or foreign, will not hurt the entire monetary system as much because the monetary system is spread among many distribution systems with lesser amounts of money in each system rather than a single banking system. Therefore, the monetary system will have less stress to economic volatility. In fact, bankruptcy, defaults, and write-downs are the only ways money remains in the economy permanently. What kind of system is that? Where the only reason that money stays here in the economy permanently is if you go bankrupt and you can't pay the bank back, okay? Or the bank has to write down your loan. Does that make any sense? Failure increases the money supply. It's ridiculous. Because when a bank loan is repaid, it reduces the money in circulation. I'm going to take a break now because then we're going to go to 10 because I want to talk how you talk to the right, because this gets boring after a while, okay? But you can read all this too. You have to put it on their terms. And so what I do with the right, and 75% of my industry, and I come from, I don't want to say Wall Street, but I come from the financial service industry, are Republicans, okay? It says, we're going to make you more money. What? We're going to make you more money, okay? We're going to make sure that and we're going to enable you to don't go bankrupt, Mr. Banker. We're going to lower your taxes. What? Yeah, we're going to lower taxes on 99% of the people, okay? We're going to have more secure economy, though, so when you build your mansions, you don't have to have a big fence around it like in Brazil with guards, okay? Or have a nice electric wire fence on the top of all your fences like they have in South Africa, okay? And these people are not going to come and get your stuff, okay? So you're going to enjoy it even more, okay? Strictly economic logic, okay? And that's how you kind of got to approach it, that it's in your best interest economically to embrace monetary reform in any form. 10, diversify the transparency and help control the amounts of new money issued for aggregate consumer demand, credit card, auto loans, and mortgages versus loans to businesses, increasing the supply of goods and services. Having more control of the quality and quantity of new money being issued results less of a chance of an overexpansion money supply that creates an asset or consumer bubble economy. Number 11, diversity in monetary reform can provide more capital to areas with high needs, such as low-tech industries, environmental businesses, and lower-income areas. Okay. Diversification provides more funds for investment. Number 12, I'm only on number 12. I got 18 to go. Okay, do I have enough time? Okay, monetary policy is an art, not a science. Monetary policy requires judgment at every stage of the process, from the initial formulation to the final implementation. Judgment is susceptible to human error. If there's an error in one major system, like in the 2008 mortgage crash, it can lead to tragic consequences. With more diversified delivery system, there's less of a chance of any single judgment error will cause a substantial financial collapse. The fiscal systems operate on a much more diversified basis. There are many governments, federal, county, and city. In those governments are many delivery systems: military, police, fire, Medicare, Social Security, education, welfare, both social and corporate. Why should new money be more diversified? And that's where I mentioned where we fund a lot of the venture capital in this country. Very interesting book by this guy. Another book to read also is off the subject is called Abundance. Okay, we have all the solutions. It's amazing. We have so many smart people around the world. It is truly amazing to me. Much smarter than I am. 14, credit risk formulas and models of private commercial banks, which are inherently flawed, will be reduced because some of the new money distribution is moved to other private distribution systems and the government. Continue to improve and increase regulation, and risk model helps, but is not the answer. Reckless lending will be scattered and there will be fewer defaults, especially with the use of an equity component rather than an all debt. Okay? A key element in the art of monetary policy is coping with change. The current most important change is accelerating globalization. Again, with more transparency in decision-making based on the volume of money created using diversified distribution systems, it will be easier and safer to cope with change. We need transparency and diversity to reduce the negative effects of excessive greed. The central bank's attempt, number 17, where are we here? Yeah, let's go to the next one. That's just the start of it. The central banks, and what I'm trying to do here is convince everybody with 30 reasons why we should have monetary reform. Then in my next chapter, I list all the evidence, all the books, okay, and then I have all the quotes. So I'm trying to convince people, if they take a little time. The only negative this system with more distribution systems is that it's harder to manage, where the NEED Act is simpler. The central banks attempt to have many regulation and capital requirements in order to offset factors of self-interest and other human frailties. But with delivery basically in one system with reduced transparency, any errors that do get through are certainly over-accentuated, the negatives, subprime mortgages. Our single private commercial banking system is less and less willing to share risk. It has lost the ability to foster the development of novel or non-standardized, risky private enterprise. This means that economic development slows and future generations are disadvantaged. Banking crisis, number 19. Banking crisis will not be as detrimental to the overall economy and other financial systems because these crises will not be severe or as influential in the monetary financial sector. Consequently, human hardships will be greatly reduced. Number 20, diversification reduces the herd behavior of financial institutions and investors in whatever country or market is fashionable at the moment. Herd behavior can lead into excessive bank lending and overborrowing with a particular industry, country, and group. There's a reason the stock market booms and the real estate market booms. It's funded by new money, okay, indirectly or directly, mainly by the big banks. Diversification will make the repeal of the Glass-Steagall Act less important as the power to control large quantities of new money will be lessened, reducing the ability of the commercial banks to lend to their investment banks, trading departments, which control and manipulate markets. It will also reduce the amounts that can be invested in risky options and derivatives, substantially reducing risk to the entire banking system. The current system charges excess interest and unfairly transfers income from investors, workers, and owners to the banking sector, resulting in lower level of production and investment to the detriment of the economy. Removing the monetary creation process from the banks and increasing the diversity of distribution provides more support for the real economy, Main Street, rather than the financial sector, Wall Street. It also increases competition and reduces inequality. This means the monetary system funds new means of production, not just collaterally based lending. Reduction of the tax burden on the vast majority of the population. This is a direct result of paying some of the government programs with newly created dollars. A diversification of systems will infuse more money in the economy, resulting in an expansive economy, causing greater total tax revenues with lower tax rates. For the top 1%, maybe not. Having the monetary system providing some spending programs substantially reduces the political fiscal pressures of balanced budgets. Now, I'm going to take a break because I'm getting tired. What's wrong? All right, where are you on? 20? Okay, that's good. I'm reading them anyway. There's a couple things that we start using the wrong language. We have to start using the right language. It's language that's developed by the left or the right, and one of the key words is redistribution, and she mentioned it yesterday. Terrible word, okay? A terrible word, because that's what they'll use against you. The answer is recirculation, because if I take from the rich and I give to the poor, what do the poor do? Spend it in my business again. It's in my own self-interest to do this. I'll get richer. Okay? So replace redistribution. Now, I'm going to talk about another term, which is the national debt. Don't say that. Stop saying the national debt, and I'll show you why a little later. I hate that. Okay? 24, having monetary system providing some spending programs substantially reduces the political fiscal pressures of balancing the budget. If all the debt and interest is paid off at once, there would not be enough money in the circulation because the current money debt system does not create the interest charges, but only the principal. Well, you heard this before. 26, because if the government borrows money instead of creating it at no cost, it has to tax future income to pay its debt service to the financial class. This tax and expense adding to the break-even cost of doing business and increases taxes to the populace. 27, 4 more to go. What stops the bank-led financial system from expanding credit and money without limit, including to their own investment banking side? The obvious answer would be that it would stop when participants ran out of profitable opportunities. But this is not a convincing answer. If the activities of the hyperactive intermediaries in aggregate create the perceived opportunities, credit growth breeds asset price bubbles that in turn breed credit growth. What stops it? It's a crisis or collapse of the market used for collateral, such as the '08 mortgage crisis. Number 28, banks are profit-seeking, risk-taking financial institutions. One's money is at the risk except for the insured amount. Therefore, they should not have the power to create money, but only distribute it. Monetary reform will reduce the financialization of the American economic system. This means the economy is stimulated by the shift from making things to manipulation of money. And thank God I moved to that, because that's where the money is. I was by luck. I got in the financial industry in 1972. Worked out okay for me, because that's where the money is. Number 30, thank God. Permanent increase in the money supply only come when there's a write-down or total failure to repay the bank loan. Is bankruptcy an appropriate way of having permanent money for our economy? And I've already mentioned that. So I've got about 30 items to persuade people. Okay? And I'm going to go on now, and we can discuss them, but I just try to overwhelm them with quantity. These are the distribution systems, and I want to let's talk about the environmental bank, okay? Now, it could be a government, it's a distribution system. It could be government-owned, but I like most of the things to be distributed with private brokers. I'm bringing in the private sector. I don't like the government doing everything. And that's what the right says, okay? The money comes from the government where they created it, but it's distributed by, including the banks, win-win, okay? And you can create a mortgage broker who can make environmental loans. Now, if you take money, besides direct spending, I'll give you an example, and I've given this example before. The two problems we have in California is called sun, okay, and water, okay? Now, when you fly into Los Angeles, and you fly into LAX, those of you who have ever flown in LAX, look down, take a window seat and look down, and you'll see more industrial buildings probably than anywhere in the world, okay? There are three or four that have solar on them. Why? We're the sunniest place in the country, we're sunnier than Florida. We have no rain now, okay? So why are all covering the big buildings? Yeah, they set them up in the little houses. Big deal, okay? So if you create a 30-year no-down loan at 1%, those industrial building owners will run down to the next block to get that loan, because you make it for 30 years. It doesn't come into operation until the system is 30 days after the system starts. The savings on energy is less than the mortgage payment. Okay. Then they sell the excess energy back to the power company. They make a ton of money, and when you make a ton of money, they rush to do it. Now they don't do it because it costs them 5, 6, 7, 8% on capital, and they can use that money somewhere else, and so they don't do it, okay? And then their payment is repaid to the monetary. So every time you repay a loan, the money comes out of the system, out of the economy, and I can loan it back in, can't I? So I can keep inflation in check. Another way is all the micro irrigation, which is low tech, that Israel's had since its inception in 1948. That the San Joaquin Valley, we're running out of water. That's because nobody's micro, or very little. We have to have drip irrigation, do the same loan for 30 years. The savings covers everything, and they'll make money on it. Profits tend to motivate people. Okay? So the environmental is very, very important. Okay? So we can convert with all these abilities of direct spending plus loans plus energy, we can redo this world, make the transition off fossil fuels within years. Okay, because money is not scarce. You just have to watch out for gougers. You have to do some regulation and limits, geographical limits, so there's no gouging. There has to be a little control. Primary housing. Why shouldn't everybody have a 30 or 40-year loan for their basic primary residence at a certain level at 1%? The rich, us rich guys, we can go to the bank. Okay, everybody should have it. Now, they still have to qualify. If you're not making any money, you got to rent. Okay, you've got to be properly underwritten. Venture capital bank, I'll let you do the same. Instead of investing directly with grants or loan, how the current government does, we can also take an equity stake. So when they go public down the road, okay, we get a return to the Treasury, controls inflation. Okay, land and infrastructure bank, student loan bank. I taught a class at a senior class for economics. They shouldn't teach economics in senior and high school. Should be personal financial planning. Let me get the thing. And I told them my tuition at UCLA when I started in 1964. And I had them guess. Of course, nobody got it right. Anybody know what my tuition was in 1964? It's zero. You guys do. You're their age. Okay. All right. Microfinance bank you're aware of. Nonprofit cultural bank. The infrastructure bank. Agriculture bank. Solving our pension problem. All these states are bankrupt. I don't want to get into pension accounting and what they, oh my God. So under certain guidelines, money doesn't cost anything. Okay? So you just pay it off. You print the money and you put it in the pension plan. Now there's got to be some rules or regulations and guidelines. And which country has inflationary problems because of excess pensions? Did any of our economists know? Sergio, did anybody know which country?
United States.
No. Brazil. We don't have any inflation here, okay, or nominal. Brazil has always had one because they overpay the pensions to their government employees. It's always a significant problem in Brazil, okay, which could be the home of our next crisis. Okay, this is important. We're going to take a little extra time. I'm going to go over a few minutes here. Overcoming the inflation objection. If you have a diversity of monetary delivery systems, you keep inflation low. You make sure the economy is productive and they're producing a lot of goods and services. The reduction of high interest rates with that usury keeps costs down. By the way, the right thinks microeconomics instead of macroeconomics. And you got to train them, that's micro, profits, production, sale, That's not how you run a government. The prior speaker was kind of in the mix, in between on that, okay? Encouraging savings and investing. In other words, if people stop spending on, an extra T-shirt or whatever and save and invest for their retirement, that keeps the CPI down. Encouraging spending on services rather than goods. Having the Commerce Department create and publish numerous inflation formulas and statistics. Checks and balances of issuing and distribution. Voters will be able to cast their votes based on inflationary management. Okay, now my vote counts. They're not managing it properly. You have to also motivate the currency and commodity markets, should be monitored in the long term, including gold. Increasing taxation removes money from circulation. Competition keeps pressure on prices. It's a little bit tied into my book, which covers competition. Substantially encourage, this is important for you environmentalists. Substantially encourage reusing, also I put the new word in there, regeneration, renewables, recycling to reduce the demand pressures on raw materials and commodities. This is very important. Elimination of fractional reserve banking. Trade deficits can be very detrimental to the value of the country's currency. That's what causes these hyperinflationary collapses. Yes, selling treasury bonds, we can still sell some treasury bonds if we want to decrease the money supply. Okay, so we can still use a little treasury bonds in controlling if we think we're getting a little bit too excess inflation. Okay. There's no such thing for, this is prior sayings, I'm almost done. There's no such thing as business cycle for an entire economy. Business cycles are for businesses and industries. It should be called the monetary cycle. There's no such thing as a national debt. Debt's something, go to the dictionary, Jack, something you have to pay off. We have not paid it off since 1835. It should be called the national monetarization account, or at best the national money creation debt. We start calling it the national debt, which doesn't have to be paid back. Taxes and spending was you heard that in the debate. Taxes and spending fiscal policy was 100% not the cause of the Great Recession. Therefore, it is not the solution. These are my past sayings. When money grows, when money flows, we grow, and when money stops, we flop. That's mine. I like things that rhyme, you know. Well, I went over it real fast, right? So I'll be around if you want to go over it, and we can talk about all these topics later, and I didn't get too much into politics.
Thank you, Mark.
Okay.